I'll say good afternoon, good morning, or good evening, depending on where in the world you're tuning in from. Did seem to be mostly North Americans on the list today, but I do see a decent European contingent, so thanks for joining later in the day on Thursday. I'm thrilled to sit down for panel discussion on the silver market with executives from silver mining companies. Before I let the speakers introduce themselves, I do have a bit of housekeeping, so bear with me. Today's event will be recorded, and the recording will be available later this afternoon. It'll come directly to your inbox. Please feel free to share it once it gets there. It'll also be posted on YouTube as well as 6.com. In addition, today's event is interactive, so there's a chat box in the bottom right of your screen. Please feel free to ask any questions at any time during the event. If they're on topic, I might sneak them into the prepared questions. Otherwise, we'll try and address them at the end. If there's any questions we don't get to today, or if you're like me and you think of the perfect question right after the event ends, please feel free to reach out, and I'll make sure those questions get directly to the executives and teams at the company to whom they should be directed to. Well, that's enough out of me. Without further ado, I'm going to let our speakers today introduce themselves. Just a name, role, company, and core projects. I'll start with you, Sam.
Yeah, Sam Ash, CEO of Bunker Hill Mining Company, and we are in the process of constructing and building the Bunker Hill mine and bringing it back into production Q1 2025.
Perfect. Sean, go for it.
Sean Kunkun, CEO, Dolly, Varden Silver. We've got one of the largest, highest grade undeveloped precious metals projects in Western Canada, and exploring with 3 drills up in Northwest BC right now.
And Jorge.
My name is Jorge Ramiro Monroy. I'm the CEO of Reyna Silver. We have a portfolio of exploration assets that started with assets from Mag Silver, and Peter McGaw is our chief technical advisor. This summer, we're focusing on the Griffin project in Nevada, which is a district scale project that's very close to I-80's project. And we're just about to start drilling in the next few days.
Awesome. Thank you for introducing yourselves. Let's get into the protein of today's event. So I want to say, obviously, gold's had a remarkable year, reaching all-time highs. And while silver's had a bound up, it still does have quite a ways to go to reach its nominal all-time high. So curious, and Jorge, I can start with you here. What factors do you think will help it return to those kind of Great Recession heights that silver had?
Well, listen, even at these prices, these are brilliant prices for silver. I think the biggest issue we're facing, more on the side of companies like ours that are publicly listed, is those commodity prices are not getting reflected in the equity prices. That's the biggest challenge that we have from the side of of being a silver company. But for companies that are just about to go into production, or some companies that just went into production last month, I was talking to one such company. They were telling me about their margins. I mean, their margins are really stunning because, most companies can produce silver at 15, 16, 17, all in sustaining. So the price we have now, there's some really incredible margins. But, I think at the moment, in my view, it's just time to be patient. There's just too much uncertainty in the markets. Hopefully, once the Fed gives a little more clarity on rates, and then once we get the U.S. election behind us, hopefully things seems to be lining up really nicely for a strong next few years for silver.
Yeah, appreciate that. I have a follow-up question once I'm done with this one about the gap between equities and silver prices. But Sean, I'll throw it to you for what factors you think will affect silver price in the second half of this year.
Good question. Look, over the last 3 years, we've run about a 750 million ounce deficit, demand versus supply. So typically, you look at other markets. We saw this in zinc a few years ago. Markets can, that demand supply fundamentals can exist, 2-3 years before you get that snap. I remember zinc prices going up 50% in the back half of a year after being in that type of supply demand setup. So look, we've seen silver. If you take it, look back 4 years. Silver was around $16 an ounce. It's quietly moved up, and we've seen it double recently. It's pulled back a little bit. It's hard to put your finger on the calendar. You talk about the back half of the year. The way I look at this setup is, historically, silver has wildly outperformed gold as you move towards the latter stages of a precious metals bull market. So the fact that we've got a 75-to-1 silver to gold ratio, even though we're mining at 7-to-1, tells me that we're in the early innings of this market.
Yeah, I appreciate that. Sam, I'll throw it to you before my follow-up question here.
Well, I think, when you look over the past 3 to 4 months, it appears that silver has taken a nice upward trend and has consolidated kind of in a relatively tight band in the $28 to $32 range. And I think that's pretty significant, because I think in the past you've seen silver spike and come back down just as quickly. And what I am optimistic about is that we've seen kind of a new floor put in silver price around that $30 range, which really sets up nicely for the back half of the year, seeing some further movement upwards from a kind of a new base that's been set in the silver price. I agree with Sean, that the silver's been in a structural deficit 4 out of the last 5 years, pretty significant. And it appeared all the indications are that deficit between supply and demand is going to continue to widen and is actually accelerating pretty dramatically. So I think silver is well set to have some further movement in the back half of the year, and I'm excited that movement there's the potential and the likelihood that that'll be a sustained movement higher, not just a short 1 or 2 week flyer.
I appreciate that. But to jump back on something Jorge said right off the beginning, is the gap between equity valuations and the price of silver. I talk about this with gold companies all the time, which is when are juniors going to catch up to the price of gold? I'm going to throw a similar question to you guys. And Sam, I'll start with you again. What do you think is going to be a catalyst? Is it a run of M&A that will actually make the securities catch up to where the price of silver has risen over the last 4 or 5 months?
Well, it's kind of interesting. I mean, I think that when you look at the junior mining market, it's not just in silver, it's across the junior mining space where this has really become a challenge. And you see that small companies, small market cap companies like ours really have a challenge in front of us, because the liquidity and the amount of trading when you're below a threshold where ETFs and algorithmic trading kicks in, volumes are just really quite thin. And the capital markets are somewhat bifurcated. You have massive volume and massive value creation once you reach a certain threshold, and below that, it's really a struggle. So I think it's less about the value potential that is presented with junior mining companies with fantastic projects. The challenge is attracting the trading, just because of the structural setup of today's capital markets.
Sean, I'll throw it to you for what do you think is going to be the catalyst for that increase in volume?
So look, I'm a big believer that it's all about a flow of funds. And if you look at the last, 15 years, small caps have been out of favor. You've got almost you could make money buying old Porsches or fine art. So when you have an everything bubble, money doesn't have to flow into our sector. Now, having said that, if you look at Newmont, if you look at Agnico Eagle, and you look at, I think Newmont declared a 25-cent per share dividend. You've got record cash flow coming out of Agnico Eagle. You've got those big stocks putting in 52-week highs. You've got $100 plus $100 a share for Agnico, plus $50 a share for Newmont. And when investors who have allocations to those positions start trimming, you're going to have that trickle down effect go to, initially the intermediate producers, the developers, the unfunded developers, and then ultimately to companies, in our space here. So I think it's just a process, it's a function, but you've got these companies, and I don't think the setup in history has ever been better, because what you have to appreciate is we went through a period where we had gold prices go from $250 an ounce to $1,900, and we had the industry react in a way where There was a lot of shares that were created. A lot of, the industry went from less than 2 billion in debt to over 50 billion for a small industry. And so you had debt, you had dilution, and you had a M&A buying spree that the companies were trying to catch up. What we've now gone through in the last decade is a cleansing, where you've had the companies have gotten lean, they've gotten mean, and they're rewarding shareholders. And that's why the equities are just on a tear. So this is, I think, the best setup in history. If you go back on the charts, I think you'll find 1971 was a similar setup where you had commodity prices starting to tick up, equities were still low. And if you look at 71 to 1980, it was one of the greatest wealth creating times in the commodity sector. So I think we've got a similar setup. Factor in, money creation, deficits, $1 trillion in the U.S. being created every 100 days. It's a pretty magical setup, and it's why gold's putting in all-time highs in every currency. And I just think, look, you look at these companies on this panel, Sam, Jorge's company, silver's the place to be. It's 75 to 1. I think it's the greatest setup of our lifetimes.
I appreciate that. And Jorge, I'll throw it to you before we move on to silver bugs and talk about that valuation gap.
Yeah, so very similar view to Sean. That maybe the one thing that I will add specifically to our sector, talking about the microcaps and silver, you have this phenomenon like that we can tell when we talk to investors, where they say a similar thing to us. I can buy like Tesla and make a spectacular return. Why should I be in your stock? Or I can get a fixed income portfolio and make 8 to 12% with relatively limited risk. I think that is one of the issues that's specifically affecting our sort of level of equities. The participants in the market, which are the gold specialist funds, they're basically just rotating from position to position, but not getting any new inflows. So we've noticed their ticket size when they invest in companies like ours has been diminished quite a bit. So we really need to have a wider participation with new investors in the market. But I agree with Sean 100%. I think we've never been set up so well. I mean, you look at a lot of the mid tiers and senior producers are making a lot of cash, paying big dividends, have still very low valuations. If you look at the general market in North American equities, there's very few companies in any other sectors that have such a good performance. Yet, the sector is out of favor. So I think that it seems like we're really well positioned. It's evidently a sector that's undervalued, and then you add to it everything that all of us who are in the silver market, and I'm assuming a lot of the audience, everything year after year, more and more things move in forward of silver. And I think this year was a very important year, agreeing with Sam, having seen silver finally settle at this 28 to 32 range. It's significant, and it's something that we thought would have happened quite a bit sooner. But I think most of us agree that even at these levels, it still appears to be to have quite a lot of room to go up. So those would be my 2 cents on this topic.
No, makes sense. I do want to get to silver bugs. I know there's some of them in the room, and they are increasingly louder contingent of the online space, I think, even than gold bugs. So I'm curious what you guys think the degree to which speculative trading is affecting the stability of the silver market, and to what degree that might even out in the future. Sam, I can throw it to you first.
So I think it's hard to say, how much is driven by the speculative market. I do know that just from the supply side of the equation, or on the supply and the demand side, and the uses of silver, the industrial side is becoming more and more important from the demand side. So I think there's a bit of a tug of war, to be honest, between investors who are looking to silver as a precious investment, and then the industrial demand. And I think the speculative side of the market is at the moment facing a bit of a challenge with the massive increase in demand of silver in the industrial capacity coming from solar. But it'll be interesting to see how it plays out.
Oh yeah, my next question. So right up next, we'll be talking about the industrial demand, so we can get to that. But Sean, eager to hear your perspective on silver bugs and their impact on silver market.
It's a great question. I think right now, about 70% of the silver is being consumed by industry. So, we're looking at 30% that's going for investment demand. I don't know. I think we're into this new world in the last 4 years where it's less speculation and it's more diamond hands. It's, to give me the physical metal, let me put it away, let me park it, and I'm going to stay committed and I'm not parting with it. And so, look, you have a certain contingent, and I'll look at like New York or Toronto, where you've got some hedge funds that are speculating, and they see the setup, and they're watching the rise in solar and some of the other industrial applications. So, and they're seeing mine supply dwindle. But ultimately, I'm a fundamental believer that what drives silver spikes, and I really like what Sam said earlier about celebrating the fact that it's been such a strong move on the charts. It's been 2 steps forward, 1 step back, 2 steps forward, 1 step back. We haven't had that spiky sugar high that's unsustainable. And I think that's so important for, and what Jorge said about, the reality is our industry, if the price stays here, it's a wildly profitable industry. And we don't need the price to go higher. But I think that there's a lot of things that are telling me that, and I don't know, it'd be interesting to get Sam and Jorge's comments on this, but, with all things being equal, looking at all other asset classes, looking at inflation, looking at, the supply demand fundamentals, I think price discovery should take us somewhere between $70 and $75 an ounce. And that's where I see the silver price going. I see it staying there. I'd be curious to see what Sam and Jorge thought about that, or if they have their own targets.
I love people put real numbers on in a panel. When we do the follow up in 6 months, we can see who's closest. But Jorge, let you speak to silver bugs, but also if you want, put a price target up there.
Yeah.
Too.
No, look, related to silver bugs, one of the interesting things about the job we have as CEOs of public companies with silver is you actually get to speak to different kinds of investors, including people who are silver bugs. Certainly I have seen a big change over the last 4 years. I think initially, like in 2020, a lot of people came in with a lot of force, and from that group of people, some of them have become a little disillusioned with silver. But some of them have as Sean was saying, sort of developed a commitment to just physical silver and storing physical silver. At the end of the day, it is a factor that does contribute towards the whole silver story. It's not the main factor, but it is an important factor when you talk about with the way that I look at it as the CEO of a silver company is you do want to have you do want to have silver bugs aware of your story, because if you want to have all sorts of investors that have different time horizons. That's what makes a public company successful. Is you want to have people who are holding long term. You want to have people who are more speculative and coming in and out, so that you can create enough volume for institutions to participate. So it's in terms of seeing that develop. Obviously, when we do roadshows with investors in the U.S., you see an incredible interest and belief in silver that I don't see anywhere else. But then again, when you look at Asia, silver in China and India is also. I just had an opportunity to be in India with the Mexican embassy there. They arranged some meetings with some of the silver importers into India, and it's just you just can't believe the numbers. Like really incredible the role it plays in their culture. And I'm sure we're all watching those numbers. India and China have become some of the biggest consumers of silver over the last 4 years, And the reason they don't necessarily can articulate it with these words, but at the end of the day, what they're doing is they can see that the fiat currencies are being debased, and they want to have real assets. So I think worldwide there is an understanding and that you have to have silver as part of your portfolio, and that's great for our industry.
And can I hold you to a price target?
In terms of price target, look, I agree with Sean that it's if it doesn't happen in this year, and like if you, I'll put it this way: if you have told me that silver was going to be $31 with the amount of inflation, the amount of debt that we've had, the amount of money printing, I really would have thought it would be much higher. So I do feel, studying the market, that there's a number of things that are keeping artificially a floor on the silver price. But I do think that those factors are not sustainable. And I do think it's going to move quite a bit higher. If I had to venture a number, I'll go for 50. Just in the sense that, like, honestly, 50 doesn't seem that far-fetched. Once you eliminate some of the resistance levels, it seems like not from where we're now, it doesn't seem far-fetched. I think some of us remember that move that silver had from about this price to 45, 47 in 2010. And I just remember the effect on the equities, right? The effect, the valuations just went through the moon. So obviously hoping that happens, but what Peter McGall likes to tell me is don't focus when you're running the companies. Don't focus on the silver price, but focus on finding high grade silver so that you can always make money. And a good example of it is look at Mag Silver. I think their all-in sustaining is something like $6 per ounce. So be really interesting to see what happens in a $50 environment to companies that have high grade silver. But again, even if you're producing at $18, $20 silver, just the margins become ridiculous.
Great, thanks. So we got 50 and 775. Sam, you get the privilege of going last on price target.
Well, I think when I think about price, I think about kind of the fundamentals behind it. And I think if you look at the fundamentals, either from the perspective of a traditional precious base, where you're looking at a kind of a 75-to-1 ratio with gold, that would be supportive of a much higher price. And I think when you look at the kind of the industrial side, the supply and demand, and you're seeing, last year, a shortfall of right around 500 to 550 million ounces, in the difference between supply and demand, expected to be larger this year. Where is that supply coming from? Well, I mean, it's coming out of inventory, and that's silver that's not available for the precious side of the business. So anyway, I think any way you look at the silver price, you're looking at needing to have a much higher base silver price to support the fundamentals, either from a precious perspective or an industrial perspective. So it wouldn't surprise me if over the next 12 to 18 months we saw another step up, like we've seen this year, where another $15 to $20 an ounce is added to the silver price and is sustained at that level. Particularly when you look at the supply side, and a lot of people, and it is true that the cure for high prices or low prices is low prices. But the problem and the challenge in silver space and in mining in general is that supply can't react instantaneously. It takes, from discovery to production, a decade or more to bring additional supply online, and so the response to a supply deficit is quite protracted. So all of that together, it wouldn't surprise me if we saw another jump up in the $15 to $20 a range that was a new sustainable base in the next 12 to 18 months.
I appreciate that. And I do want to get into now, actually, kind of a deeper dive into the industrial demand. So I think everybody sees the investors see the highline numbers on industrial demand, but I'd love to get into just the details of where that demand is coming from and why it's likely to grow over the next 5-10 years. Because I think those factors are in a lot of ways easier to predict than speculators. So I'm eager to hear your perspective on what's driving that growth, where it's going, and what might impact it. Sean, I can start with you.
I'll keep this one short. Look, I think we've all seen the growth in solar pick up significantly. 10 years ago, solar represented 3% of demand. It's closer to 14 today, and it's forecasted to go to 50. So I think we'll talk about the solar side of it, and beyond that, there's actually a question in the chat about the military sector, and I've got a friend, John Little, out of Pennsylvania, who has got the Silver Academy, and he's highlighted really the underreporting of how much silver goes into weapons. And I think unfortunately we're in a world right now where we've seen a rise in conflict. So that means an increase in the usage of weapons. And if you're a government and it's critical in weaponry, you're probably going to underrepresent how much silver you actually need. So I think look, like I said, but historically, what sends silver through these price, to get a $15-20 move in the next 18 months, historically, and it hasn't been a slow pickup in industrial demand. It's been the precious aspect of silver. And I think Jorge's point, going to India, in Q1, a third of the demand for silver came from India and came from solar. And my heritage, my family's from India. I talk to people back there regularly, and the reality is, even though they have a growing middle class and growth and prosperity both in China and India, it's unattainable to acquire gold and rupees for 99.9% of the population. And so the new wealth building for the younger generation is at a necessity, because they're priced out of the market, are moving to silver, silver jewelry, silver investment. And so I really think silver is the new gold for much of the world. It's always been that way out west. It's been the gentleman's metal versus, gold for the kings. But we're starting to see, I think the reason and you asked earlier about speculation. I just want to touch on this point. I don't think we have a lot of speculation going on right now. I think that, it's really been an industrial story, and it's been a story of, some from the East slowly picking up the metal. But I really don't think it started, which excites me, because, we as an industry can't survive with $16-17 silver. It just doesn't work. So these new prices are a good start, but I think if we really want to incentivize exploration and to really replenish and to find out where we're going to get this future silver, we need to invest in that. And the last point I want to make for any viewers who are new to this industry, the reality is only 28% of the silver comes from primary mines, right? Most of it gets thrown off as a byproduct. And really, we should be talking about copper, because if 65% of our silver comes from copper mines, and we talk about some of the challenges, if I were to be lucky enough to make a copper discovery, which is rare, an economic discovery, the timeline into production on an aggressive basis would be a minimum of 20 years. And we're talking about billions of dollars of capital, and more likely 30 years. So if we think about and we ask ourselves, where are we going to get the world's future silver? And we need, we're in the setup for, things like copper. If we don't know where we're getting the copper, we're not getting the silver either. And it's why I have that target, that initial target of, $73. But I think ultimately, triple-digit silver would not surprise me.
I appreciate that. Jorge, I'll shoot to you for where you see the growth in industrial demand coming from.
Yeah, so definitely very much agree with Sean. I think in terms of industrial demand, obviously solar. I think there is also you may have seen the numbers for electric vehicles. It's also the numbers that I have seen, different reports, but in general speaking, 5 to 6 times more silver in an electric vehicle is possible. Now, I think the numbers that we've all seen for electric vehicles seem like maybe not as optimistic as some of the reports from a couple of years ago, but obviously long term, that's another sector that's going to contribute. I was also had a similar experience with my trip to India, and as many of you know, I'm based in Hong Kong. So there's a little district in Hong Kong that has a Kitco store where they sell the silver coins, and then they have sort of a few more more Chinese local versions. And I like to go there and just chat with the store owners, just again anecdotally what they're seeing, and because of the price of gold being so high, a big move into people who regularly buy physical gold to buying physical silver. That was something that I wanted to just again, maybe sometimes that doesn't get as much mention. And then the last thing that I would say in terms of I think that the key is to focus on the supply. I think that's the part that, again, like year after year, you see the numbers, and it does seem like we consume all the silver that gets produced and more. And then if you count the paper market, it seems like we trade a lot more silver than it's produced. I honestly can't believe I can't fully understand how the industrial players get their silver. And as some of you may have heard me mention this story, but about maybe 3 years ago, I was in Mexico City, and I had a breakfast meeting with a gentleman who was in charge of procurement for raw materials for Samsung, and he was telling me, one of the things that he has been mandated with is just make sure that they have deals with small producers around the world, because they don't want to wake up one day and be like, we can't meet our production targets for a laptop or mobile phones because we don't have enough silver. That worry has been there very strongly from for the last 5-6 years. So I think it's something that it's coming. I think the silver production is notoriously obscure because of what Sean was mentioning. It's it's easier to track the primary silver producers, but it's a little bit harder to track the byproduct from especially from nickel and copper around the world. So I think those are factors to take into consideration as well.
Awesome. And Sam, shoot to you for growth in industrial demand.
Well, I think that the largest area of growth in industrial demand is going to be from photovoltaics. But I think what's interesting about that is that I think the growth in China is pretty safe and secure. They're clearly looking to achieve energy independence, and solar is a massive part of that equation for China. But I think that in the West, in Europe and the United States, there's a bit of a backtrack, I believe, and it'll be interesting to see with the results of the U.S. election whether the pace of the low carbon energy transition is as fast as what was projected a year or two ago. So I still think there's going to be significant demand and significant growth in that space. But I do think that some of the political challenge decisions that are coming up in the next year throughout Europe, in the United States, there could be a bit of a pivot and a bit of a step back on the pace of the low carbon energy transition, which may, to a certain extent, reduce some of the industrial demand projections from a Western world perspective. But I think that it's pretty clear that China is still driving significant increases in silver demand for the transition and the effort and the focus that they're putting on energy independence the role that solar plays.
Thanks. And I got kind of a hot take question next. I know all of you have operations in North America. I'm curious if you think, and Jorge, I'll start with you. You think silver should be considered a critical or strategic mineral, and what the likelihood of that happening in the near future actually is?
Yeah, I think absolutely it should be considered a critical and strategic. I think what it's going to take is exactly what I was telling you. You know, one news story, like, you know, of like some of our dear electronic products like an iPhone or, you know, or laptops being delayed, something that makes a big headline for people to take it seriously. And maybe the one thing that you could make an argument you can make against silver is that it's like, for instance, compared to other strategic metals, I mean, silver is abundant in the West. So maybe you could say it's not like, for instance, with many rare earths, both the production and the processing is completely in China. So maybe that's something, you know, against silver. But I think, you know, the generally speaking, from conversations that we've had with people in the U.S., it does seem like people are starting to take it. People in government and different think tanks are starting to take that silver into account as a potential strategic metal, and I do think it will eventually get there.
Appreciate that, Sam. I'll throw it to you for the politics. You think it's likely to become one, and in what time frame?
I think that it potentially it's likely. I think that, you know, Jorge's right, is that from you know, from a geopolitical standpoint, I think that when governments look at silver production, I don't think it's probably near the top of their list of concerns. But I think that it is strategic, particularly if you know, the political will exists to accelerate a low carbon energy transition on the supply side. I think that it also can begin to play an increasing role potentially in reserve currency backing, and so that it could have some strategic implications from, you know, from that perspective. But I think that Jorge also touched on another point. You know, I was talking with you know, a metal trading group this last week, as you know, we're getting ready to go into production, so always keeping a, you know, kind of a feelers out there, understanding the market. There's so much demand for concentrate, in particular lead concentrate and zinc concentrate, coming from China, and a lot of silver goes that direction, you know, for processing. So even though you have supply in the, you know, North and South America, a significant portion of that is exported to China for smelting and refining and never comes back. So you know, so that's an interesting angle that actually don't know enough about, and doing, you know, looking into that right now to see how much of Western supply of silver actually at the end of the day makes it to a Western market.
And I'll throw it to you finally, Sean, for the politics.
Yeah, listen, we have lobbied the government federally here. You know, it was an initiative that was led by First Majestic, and we're working towards making the case and the argument so that it is considered critical. And I think, look, I think, you know, we've got, you know, whether it's energy ministers or mining ministers from all over the world that meet with industry, and they listen. And I think at some point in the near future, it will be a critical mineral. So I'm optimistic that we get that status soon.
Great. I'll start with you, Sean, here. This is really more of a marketing question than anything else. Common thing I hear from investors that they generally don't appreciate, and they're sometimes quite vocal about it, when companies headline their silver equivalent ounces. So given, and we've already discussed, silver is largely a byproduct, is there an issue in the market where lead, zinc, et cetera mines market as silver companies and hope to trade at a greater premium? Do you see this as a problem, or you think it's kind of an inevitability?
It's a really good question. And again, I want to be sensitive, because, especially considering that most silver comes as a byproduct. If, you know, we'd be really in a tough, precarious position if we didn't have that byproduct silver. But I think what you have to consider if you're an investor and you're wanting to get exposure to silver, if you believe, if you're looking at the supply demand for silver and you're bullish on silver, if a company does express things on a silver equivalent basis, and only a third of their resource or their results are actually silver, and you've got a third lead and a third zinc, or it all depends on what the other equivalent is. Is it gold? And if you're a precious metals investor, is that okay? So I think it's a complicated question, but the reality is I'm more bullish on silver than I am on other metals. I think copper's going to go up. I think all the metals are going up. They've actually led silver, and they've gone to new all-time highs. Talking up my own book a little bit, we've got primary silver mines, and I'm an advocate that our silver should trade at a premium because it is primary, and it's rare. It's 28% of the market. So, but I also think investors should understand that you are getting value for those other metals. So maybe what companies can do is they can, in addition to putting out the equivalent number, break down what percentage of that is silver. And I think that would be helpful. Look, I celebrate, all silver, but at the end of the day, when I'm looking for opportunities, it's the silver that goes into the photovoltaic cell. It's not the other metals. And that's where the demand's coming from. So I hope that answers your question.
No, definitely. Like I said, it's largely a marketing question more than anything else. But Jorge, I'll throw it to you for your perspective.
Yeah, for our company, for instance, we have a policy of not doing silver equivalent numbers. We have a project in Mexico that's mostly silver with very little byproducts. But the CRD projects in our portfolio do have, silver, lead, zinc, and a little bit of copper. But we really focus on separating the numbers. And again, like I think a couple of useful things for investors to look at is, number one, you want to look and make sure that the silver grade alone is sustainable. So, with the silver prices, 250 grams per ton silver is okay. With sort of the previous decade pricing, 300 to 350 is a better price. And then the other thing I would say is, some companies, I've seen companies that, let's say, have 60%, 70% silver, and then they have 30% byproducts. If the byproduct is gold, I honestly don't have a problem at all with doing silver equivalency. Because gold kind of, tends to move more in tandem with silver. If it's zinc and lead, I think the part that I personally don't like as an investor is if, all of a sudden you have, like you were saying, 20% silver, then 80% lead zinc. I think that's a little bit. But at the end of the day, I think the most important thing is just for investors to just, look at it carefully. And I think most companies do disclose it, even if it might be on the fine print somewhere. So at the end of the day, like there's times where lead and zinc are also very, very good additions and very valuable. And it does create a nice addition. In CRD deposits, oftentimes you can basically have the lead and zinc pay for the entire cost of development and capex. So that would be my opinion. Don't have an issue of it so much when it's equivalent gold and silver, and then when it's lead zinc, I think if it's like really 30% or 20% or 10% silver, when I've seen companies report that as a silver equivalent number, it does feel a little bit misleading to investors.
Yeah, it's something we hear about a lot. We get a lot of emails, so I thought I'd throw it to you guys. Sam, I'm curious for your perspective.
Well, I agree with Jorge. So I can tell you about Bunker Hill a little bit, because we're in this. We have a polymetallic deposit. 70% of our revenue is from zinc. We're very upfront about that. But we also want to make sure that the market is aware that the Bunker Hill mine, we're going to produce 750,000 to 1 million ounces of silver a year. And there was 165 million ounces produced historically over a 100-year period. So silver is a part of our story, but it would be disingenuous for Bunker Hill to market itself as a primary silver mine. We're clearly not. And so I think that at a minimum, if you want to report it in zinc or in silver equivalent, it should be not just a majority, but kind of a strong majority of silver. And if you're in a strong majority of silver and you're targeting, a silver-focused investor, then why not just speak to the silver only and talk about a base metal portion as well, or a discount associated with it, but speak to the production itself in strictly ounces, right? When you're talking about a cost per ounce, that's a little bit more challenging because you certainly generate revenue from the other marketable metals, but if you're talking about the actual production, even though we're zinc equivalent, or zinc dominant, I don't talk about our the zinc equivalent pounds that we produce. I talk about I'm producing this many pounds of zinc, this many pounds of lead, this many ounces of silver. So my thoughts on it are that clear and transparent is what investors should demand and what companies should provide.
Appreciate that. I think sure our investors do too. Sam, I'll throw it to you for a follow-up, actually. I'll give each of you a kind of individual question for your specific company. Sam, Bunker Hill, as I understand, has a fairly unique strategy for regenerating the previously closed Bunker Hill mine. Curious if you could elaborate on this, the approach you're taking, how it differentiates you from other miners.
Yeah, absolutely. So Bunker Hill is kind of an interesting mine. It operated for 100 years in the Silver Valley of northern Idaho. It was vertically integrated with a lead smelter and a zinc plant. It was closed for environmental performance reasons, and for the last 40 years has been in the U.S. Superfund cleanup. And we're now bringing that mine back into production. And it's very unique, and it was specifically what we were looking for, myself and our executive chairman, when we were looking for an opportunity to build a company, and that is, the ability to move through the regulatory process in an efficient manner and go back into production. So, in addition to being on a Superfund site, in addition to having 100-year operating life, in addition to having a history of producing 165 million ounces of silver, Bunker Hill is all on private land and all on patented mining claims, which simplifies the regulatory process. So this is a mine restart, and we're dealing solely with the state of Idaho for our regulatory oversight and regulatory permitting. And really what that means is that that regulatory process is not driven by politics. It's driven by the technical merits of the technical work and advancing towards restart, which is why we've been able to come to a site that 4 years ago that we didn't own. The company had a lease with an option to purchase, and in a 4-year period, advanced through the getting a resource in place, doing the technical work, financing the build, and going into production in a 4-year window. And Sean mentioned that the timelines for bringing a mine typically into production is 10 to 20 years, and he's absolutely right. But we were intentionally seeking an opportunity where we could beat that timeline, and we found it in Bunker Hill. And our approach and our strategy right from day one has been to leverage the existing infrastructure on site and execute a low capex rapid restart, get into a cash flow generating perspective, and then use that free cash flow to unlock the enormous upside value that we see in the asset and in the district.
Awesome. Appreciate that. Sean, I'm going to throw it to you. I know Dolly Varden operates and is exploring in the Golden Triangle. Given the recent incident in the neighboring Yukon, I'm curious if your team has received any calls from concerned investors about potential regional risks, or if you feel there's an enhanced risk of regional risks.
No, great question. It's what happened up in the Keno Hill district of the Yukon is very unfortunate, and we see these incidents from time to time, and it's part of the risks that come into the sector. There's really, it's a separate province, a separate territory in the case of the Yukon. So no, if anything, it's actually had the opposite effect, where investors actually view the Golden Triangle, particularly our project, as more valuable today because, so if you look at the history of Dolly Varden, it was the richest silver mine in the British Empire when it was in operation. The adjoining Torbert mine, which we also own, was Canada's third largest silver producer. Those are both underground mines, very different than the open pit heap leach operation up in the Yukon. So if anything, it's actually, we've seen a capital flow into their district and the region. And just speaking about the neighborhood, we've had some record high gold pour days at Newmont's Brucejack mine. Skeena has gotten their project construction. So we're seeing that, majors like Newmont, like Teck, come into the Golden Triangle. We're seeing companies like Dolly Varden, grow significantly in market cap and valuation. It's a very prospective area. So to answer your question about the unfortunate, events in the Yukon recently, it's actually made this district more attractive. And particularly, like, I've been a big proponent of minimal disturbance, high grade underground mines. It's just something that I've known for the last 20 years. From a community standpoint, from a disturbance standpoint, and from a grade standpoint, it's been just my preferred, method of mining. And so I think that's the biggest difference.
Appreciate that. Finally, Jorge, I've got one for you. I know Reyna has a diverse portfolio of projects. I do want to zoom in on your projects in Nevada. I'm curious if you could share some of the unique geological features of the Griffin and Medicine Springs projects, just for investors in the audience who might not know about it. Curious how it might differentiate you from other silver exploration.
Yeah, no, absolutely. And I think, especially the project we're going to drill this summer called Griffin. It's a very good illustration of something that's happening in the area of Nevada where we are. And essentially, it's one of these stories where, I think Nevada is, especially the Carlin district, is very famous for, obviously, Carlin gold deposits. Some of the bigger deposits in the world are there. And I think one of the things that happened the last few years, for those of you who follow the I-80 story, is, that's a Carlin gold open pit gold mine that was in production. I-80 bought the property, and then as they were doing some holes, knowing that there was some CRD silver mineralization there historically, but I think my understanding is they were looking more to see how much deeper their gold deposit went. They started finding this stunning CRD silver-rich mineralization all through the walls of the open pit. And I had an opportunity to visit the core shack a few months ago, and really some stunning high-grade silver with lead, zinc, gold, copper. And what that has caused is people to relook at the Carlin district and realize that a lot of CRD mineralization have been missed. So this project we're drilling this summer is called Griffin, and it's a project that actually Peter McGaw had his eyes on for the past 10, 15 years, and had always been basically under exploration by one of the majors. The last major that had it was Agnico, but they're really focused on the gold potential. We inherited the project with an incredible amount of drilling, geological data, and some very interesting drill results on both gold and silver. But this is the first time that we have an opportunity to do a systematic approach, looking specifically for that CRD high silver grade potential. And we're about to start drilling in the next few days, actually, and very excited. We've done a lot of work since we took the property last year, developing our targets, and we're excited to start from what both Medicine Springs and Griffin do have the opportunity of being a high grade, large silver deposit in Nevada, and there's been in the last few years a renaissance of exploration for silver in Nevada, and we're excited to be part of it.
Awesome. Well, as we're close to the end of the hour, gentlemen, thank you so much for your time today. I really appreciate it. And for those watching, either on replay or the live audience, if you do have any questions specific to the executives, let me know. Just reach out. We'll make sure that it gets to the right audience. But Sam, Sean, Jorge, thank you so much for your time today. This is great.
Thank you.
Thank you very much.
Have a great day, everyone.